Ranjit Sarai, VP of Banking at Credit Sesame. Just a bit about myself, the background in software engineering and product management. I've been in banking for just over 10 years in retail banking, primarily in Canada. And my roles have been around digital innovation and all this stuff around fintech before fintech became a big thing. And then recently, a few years ago, a few friends of mine and I broke off and started our own company called Stack, which is a challenger bank. So very familiar with the stuff Tearsheet's been doing on reporting on challengers. And so last year, Stack, we were approached by Credit Sesame. And about a year ago, we were acquired by Credit Sesame. And I could get into some of the reasons there. I think we ended up seeing, eye to eye on a bunch of things. The vision of Credit. So Credit Sesame, just as a quick thing, it's a fintech that's been around for a few years and has actually helped tens of millions of Americans, do better financially based on their credit score, and really being a fully transparent platform when it comes to data around score and score improvement stuff. And so the vision that Credit Sesame set out, and Adrian, the founder there that we connected with, was he wanted to build this, super app for credit, which didn't exist in the market, still doesn't, I think exist in the market. No one's kind of doing all things credit when it comes to financial services. And so the cornerstone of that super app would be banking, which is something that was our wheelhouse at Stack. And so the acquisition was super complementary. And we launched Sesame Cash about a year ago. And just recently, we're launching our credit builder account, which I'm super excited to talk more about today with you guys.
Yeah, we'll definitely get into that. And if I remembered right, you started out as partners before the acquisition was made, right?
Yeah, exactly. So we were first approached. We had a common investor in Stack, as well as Credit Sesame. Again, Credit Sesame is based in Silicon Valley. There was an accelerator that had invested in both of us, and it started off as a partnership, right? So Credit Sesame again had this vision. They need to get banking in their platform. It was going to be seen as an anchor to this super app vision that the team at Sesame had. And we had all things banking under our belt, right? We launched a challenger bank. We launched a banking as a service platform as well, powering other fintechs. And so we came on board, we started working. And then as we were working together, it's like all the light bulbs came out, right? Like we're like, oh, we believe in the same vision that you guys do. And for myself personally, it was a big eye opener just to understand the power of credit and how that could either enable financial inclusion and be a force of good, or if you're on the wrong side of the credit, limit you severely as a person, right? So, we felt pretty passionate about the mission to basically empower everyone to do better financially through the power of credit, right?
So the Credit Sesame Stack story is really one of a challenger bank, of embedded. You really you check all the boxes.
Yeah.
And an embedded example and an embedded platform now. So talk about some of the problems with today's credit system and how that's tied to financial inclusion.
Yeah, 100%. And again, I got a big learning curve when I joined. I think when you take a step back, credit is super important for three reasons. So one is access. So when you think about access, if you don't have a credit score, so the extreme end is you're what's called credit invisible. That's the actual term. That's someone that doesn't have a credit score at all for whatever reason. They're new to the country, or for a number of circumstances, they just don't have a credit score. And that's actually a pretty big segment of America. There's about 40 million Americans that fall into that category. So if you're invisible, you're literally cut out of the economy. Like you can't access credit. You can't get an apartment where you want. You might not be able to get a job. You might not be able to get a phone, right? Like the basic essentials. So access is key. Just having a credit score is so critical. So access is a big one. And then when you ladder up, the second thing is enablement, right? So if you have a credit score, but your credit score isn't that good, what's considered good by the banks, let's say it's a medium credit score, you have a much higher hill to climb than the rest of us, right? The playing field is not leveled. You're starting behind the starting line. I'll give you an example. If Zach, you have a great credit score, you need a car because you have to go to work's 20 miles away. There's no public transit, you need a car. I'm in the same situation. We live in the same neighborhood, right? My credit score isn't that great, right? I'm paying thousands of dollars more for the exact same product, just accessing that product. That the car that costs 20 grand, you're paying 3% interest APR. I might be paying 20. And that shocked me. I didn't know people paid 20%, but it's a real thing when you get a car. People paying 20, 22% on a car. That changes everything, right? And so the playing field isn't level. The enablement, the credit score could put you on the wrong side of that. And the last one which is key, is empowerment. And all these things kind of touch on financial inclusion, but empowerment's a big one because if you think about it, credit is leverage. Credit is a force magnifier, right? It's like a lever you can use in your life. And in economics terms, there's a quote that credit accelerates the passage of time. So what that means is if I have credit now, I don't need to wait 3 years to save to pay for school. I could do that now. I could empower myself to take that course. In the example of the job, I might have a job offer 20 miles away. I can't get there, but I could use credit now to get a vehicle so I could take that job and better myself and my family. So the ability to use credit as leverage could help someone accelerate what normally would take years and bring it forward. Again, the proper use of credit. So, access, empowerment, enablement, like all these things are so critical to having someone understand and control their credit. And for the most part, a lot of people don't focus on their credit. It's just like a byproduct, right? They find out when they get rejected from a card or something, but it's so critical. So part of the goal that we're trying to do is really raise the awareness, but also just increase the transparency of your credit score and what impacts it and stuff, right?
So I'd like to jump into the Credit Builder products that you were talking about. Can we talk about how Credit Builder banking works for Credit Sesame?
Yeah, 100%. And maybe we'll start from the beginning, right? And how we came up with it. Because, part of it is there's so much institutional knowledge around credit at Credit Sesame. It's been around for a number of years. People there are fully versed on it. But we definitely want to start with a clean slate, right? We want to basically throw out the book and say, if we could start from scratch, how we'd build it. And so, coming from Stack in the banking payment space, we said when we built Stack, it was very kind of like this customer-centric exercise. We sat with customers and really tried to figure out what the pain point was. And the pain point from a credit building perspective is, lack of understanding of what drives the credit score and how to increase it. And then also like the key message was from customers was like, just keep it simple. Like, I don't want to have to deal with 2 or 3 cards. I don't want to worry about one account for banking and then a separate credit card or card I need to use for building my credit. Because when it comes down to, I'm at the point of sale, I'm going to buy something. I don't want to decide, should I use my white debit card or my green credit builder card when I'm buying this coffee? Which one's better? Am I going to go over my utilization, under? Like, these things are just fly way over people's heads. Mm-hmm. And so we said, okay, well, we have all this knowledge and let's force ourselves to create a super, super simple product. And again, I'm sure the theme in financial services, everyone knows, is the simpler the product for the consumer, the more difficult it is to build. And so we want to build this intelligent app and experience of this card that basically takes care of all this stuff for you. And so one thing we landed on was also coming from the banking space, again, this notion of the money you have in your bank account should be working for you, right? We always say like, hey, the money's sitting there, there's no interest, especially in this low interest rate environment. You should be investing, buy crypto, whatever, like the money should work for you. But why can't it work for you to build credit? That was like our moment to think of that. And again, we had launched Sesame Cash, was in the market. We had, over 1 million people enrolled in the Sesame Cash product. They had these cards, they're spending, can we create a credit building feature, not as a separate card and product, but basically merge it with the bank account so that the activity on your debit card actually builds your credit. And so that was a challenge. And so then we worked with all the bureaus, TransUnion's been a huge partner, but also Equifax and Experian. We work with MasterCard very closely. MasterCard's a huge proponent of financial inclusion. And that was a key theme of this product. We want to make it available to everyone. And so the way it works is super simple. You have a Sesame Cash account, and Sesame Cash is like a fully featured bank account, right? You get paid 2 days early, no ATM fees. You could put your payroll on it. So you have your Sesame Cash account. In the app, you just select how much money do you want to put aside to build your credit. And that's it. That's all you got to do. Behind the scenes, we do all the magic. We create a credit builder account. We put the money aside. We report that immediately to all the bureaus. Most people see a lift in their score. If they're a 0 score user, they'll go up to like 600. We've seen that. That's outliers, but it does happen. And then that's all you have to do. Then all you do is you keep spending on your debit card. You don't have to worry about anything. And what happens is we know what the right utilization amount is, right? We have all the data on you in terms of what the proper utilization is on your credit builder account. And so daily, we'll look at your transaction, your debit account, and we'll sweep them over onto your builder account, maintaining your utilization at the optimal limit. And then what we'll do, we have a feature called auto pay, which when you opt into it, at the end of the month, when you have like your statement of your credit builder account with all the purchases and the amount due, we pay it on your behalf on time. So what happens is, because again, education for us coming from the banking side into the credit world, establishing the trade line is only the first step, right? You have to also track your utilization, and you want to make sure you're building payment history over time with on-time payments. And so all these 3 or 4 things come together to really help people increase their score. And so from a user perspective, it's super simple. Again, all the stuff kind of happens behind the scenes with the orchestration that we're doing to make it work.
Thank you. I appreciate that. I just want to kind of go, I guess, back. You mentioned the credit agencies and their involvement in the product. Like, where are they in sort of this whole ecosystem, right? Like, it's great to hear that they were a partner. Like, how are they approaching alternative data and maybe how the partnership with you guys? How's that, I guess, point to where they're headed in the future?
Yeah, it's interesting. And they've been great partners. To be honest, they're pretty excited. They're really excited about this product. But they have this role that they're the stewards of this data, right? They have to abide by certain rules, which makes sense because the data has to be normalized. You can't just have anything show up on your credit report, because what happens is they normalize the data. They come up with a score based on a normalized set of algorithms to basically make it even for everyone, because banks rely on that to do lending and et cetera. So again, their job is to clean the data up coming in. And so they're very careful on making sure what's coming in. And the other key thing is also the bureaus want to make sure that you're not trying to game the system, that a customer that's coming in through our product has the ability to fail, basically. So meaning that if you do bad behavior, that reflects on your score. If you do good behavior, that also reflects on your score. So we built a product in a way that a lot of the features you opt into, like auto pay, but you're getting nudges to basically do good behavior, right? And so you have the ability to go up and down with your score. And most of our customers, actually the majority of our customers, have seen an increase. From the bureau side, they are exploring different data pieces to come in. I think companies like ourselves are kind of pushing that agenda heavily. So we've acquired a company recently to report rent reporting. So rent is going to be reported as part of this utility. So other transactions that fall outside the typical purchase. And then, at the end of the day, I think the industry itself is moving through this shift around consumer-driven finance, right? And that's, from Stack's perspective and Sesame, when we joined, one of the key things and the key part of the strategy was to be extremely transparent. So Credit Sesame, your score gets updated daily. You see it. You see your report. We don't charge any fees. And we have this marketplace where you could get, pick the best product based on your criteria. And it's an unbiased marketplace. And that's breaking the traditional model of banking, which is asymmetric sharing of data, right? Traditional banks have this asymmetric view of data with their customers. They know more than the customer does. And so they make money off that margin. But with us, it's really about complete transparency. Your score is transparent. It's updated daily. Your builder works daily. And the products and services that we offer you, we're impartial third party, right? We show you cards from Chase, Bank of America, Capital One, like you name it, and lenders. And then we have this data layer, I think that's super interesting. That's basically using all the data we've amassed over the last 10 years of being in business to predict your score. So based on activities that you do, we say, hey, if you get this credit card, this is what your score will be in 6 months. And it's extremely accurate, right? And so we use that machine learning predictor essentially to be, again, transparent to users on what their future activity will be based on current behavior.
Right. So I think this credit builder product, Ranjit, is a good example of like fitting right into your user experience, your user's experience. It combines the data, combines banking. But I also know that through our reporting, Chime, JP Morgan Chase, Wells Fargo, they also either have launched credit builder products or they're in the process of doing it. So what's happening, like you mentioned consumer driven, finance, or banking, what's prompting the demand for all these types of products right now? Like why now? And where do you see that?
I think there's a few things happening at play. So I think generally, the awareness level is going up. There's actually another shift as well that's kind of been happening for the last year or two and has been accelerated during COVID. And it's a generational shift as well. If you look at the adoption of credit cards by Gen Z and Millennials, it's way down, right? They like, I think I saw from a Tearsheet article, like 90% prefer debit card, right? So now you have this debit activity that Gen Z and Millennials are using, young Millennials, and that is not helping in any way your credit score. And even if you don't use credit cards, your credit score is still important. Like we talked about jobs, renting an apartment, getting a phone, all these things kind of depend on that. And then you layer in the whole, the previous speaker was talking about buy now, pay later. Buy now, pay later is creating this kind of hybrid debit lending product. None of that gets reported for the most part in the bureaus. And so you're finding this generation of individuals transacting, but not necessarily seeing an improvement or change or any type of activity on their credit score. And so I think the awareness level of that is increasing. I think, the banks have always kind of been in that space, but now seeing the fintechs kind of innovating, they're kind of jumping on. There's other challenges, like you mentioned, Chime and others. And I think they're doing interesting things there. But again, I think we view the fact that we're able to merge the credit builder with the debit in one product and one card, because the card is essentially the physical manifestation of the product. Like that's a bit different. And then the other piece is, the credit score is not the destination, right? The credits, no one, I mean, there's a few people that like want to hit 850 and they game it, but the credit score is your first step. It's just an enabler, like I said, to what you actually want to do. And so once you hit your score, let's say you go from like 500 to 720 and you're in a good state, and now you want to actually do something with that score, you need a product to help you do that. You need some type of lending product, some capital allocation. And that's where Credit Sesame really kicks in, because we have that unbiased marketplace, and we could be unbiased because we're not a bank, right? We don't offer our own lending products. And so what we do is, when you're in the ecosystem, when your score goes up, all of a sudden, like the marketplace lights up and say, hey, by the way, you're pre-approved, one click away from getting this card that you wanted. You weren't able to get it before, you can get it now, or this car loan or this mortgage or whatever it is. And so that's the benefit of being kind of this super app ecosystem, is one thing feeds the other, right? The bank account builds your credit, the credit builder gets you to a certain point, the marketplace gives you the products at the lowest possible lending cost for you, right? So again, trying to level that playing field. For everyone.
That's a powerful cycle. Well, do you think that we're going to see more credit builder products on the market?
Yeah, I think so. I think, just like fintech, there's going to be this explosion, like we saw with challenger banks. That was a consolidation. The super apps are coming, right? The challenger banks are as big as the traditional banks, some of them in terms of market cap. I think this credit building capability is a key feature. It's a key thing for us in terms of an anchor. I think the ones that will succeed are the ones that have the best kind of ancillary products and service. Like I said, that ecosystem is very powerful. I don't see anybody doing kind of the super app experience around credit like we are. So, I think it's going to keep building. I think there's some interesting companies doing stuff around international scores and trying to normalize, your score from your other country when you come over. That helps greatly for newcomers and those that are new to the country. So yeah, we're going to continue seeing this trend in my belief, but we're all in on the credit space. So we want to be leading that space, definitely.
Awesome. We just got a question coming through from Rahul. What is the business revenue model for monetizing a credit builder product? Is it mainly interchanges? People use debit cards?
Yeah, it's a good question. And I think, part of the reasoning of us merging the two is the byproduct of your transactions showing up on your credit builders. You're actually using your debit card, right? And debit card drives interchange. So one key, just like any other challenger bank, one of the key drivers of revenue is interchange, and that's the use of the debit card. And so debit transactions, purchases showing up on your builder by virtue means more engagement, more transactions, more revenue on the interchange side. And then the other piece, which is large, is the marketplace, right? If we could enable a whole subset of customers that typically wouldn't be allowed in our marketplace, like think of Invisibles. Invisibles today have a very difficult time entering our marketplace because they don't have a credit score. If they enter through the bank and builder account, they could go again from 0 to 650 or 0 to 700. Now they have all the options in the world in terms of credit products. And that we have a very strong revenue stream as our core business, being the marketplace connecting consumers to banks and issuers with products.
Yeah, we heard something similar from Renaud Laplanche, the founder of Upgrade, talking about their sales funnel. And as people fell out, they were able to provide, even if they couldn't provide a lending product, they had a bank account that enabled them to kind of make their way back into the audience. Ranjit, what about, I guess your view of the future? Like, what does the world look like when there's more equal credit opportunity?
Yeah, I think you're going to see massive changes in society. Like I talked about, this is a huge, once you get past the point of like, I just have to keep my head above water, I'm trying to make the week, right? And that's the vast majority of Americans. Like 60% of Americans are paycheck to paycheck. But at the same time, they're also trying to make themselves better. I think a common theme across, just humans in general is you want to make your life better for yourself and your family, no matter which country you're from and where you are. And I think, like I mentioned, credit being a source of leverage or force magnifier could get you there much quicker, right? And I think once we level the playing field and we enable everyone to have a credit score first and foremost, and then everyone to be able to increase their credit score, we're equalizing the level of opportunity for everyone. I think you see massive change there. In terms of where the industry is headed, again, I think I'm a strong believer in this, consumer-driven finance. I think consumers are demanding ownership of their data and they want to have full transparency in the data. Again, the traditional model of banking, depending on asymmetric use of data, like trust us, don't worry, use all our products, get our mutual funds, et cetera. Like all that's fell by the wayside through technology. Data wants to be free. And so we want to have this ultra transparent platform. We're able to monetize, like I said, through Interchange and just being a marketplace so that we benefit obviously through the volume that comes to that. But we're a big proponent. Again, we're pushing the credit bureaus to enable that and work on some pretty exciting things down the pipe to continue the financial inclusion problem, because that's our core. Our core mission is to really make democratize financial wellness, and that's really the financial inclusion play. It's let's just let everyone in the door, level the playing field, and see the outcome of that.
Totally. We had, kicking off our keynote today, we had the head of Square Banking, and one of the things Luke said was that because it's a closed loop system, they don't use credit scores, and they're able to loan off basically because they can see the revenues and expenses coming in and out of an SMB. Credit Sesame has a very different approach. It's more the open system. What do you think the future of the credit score looks like?
Yeah, same argument I had back in the day: Apple versus Windows, closed versus open, Android versus iOS. I mean, like you could take the analogy of I think a closed system has tons of benefits. Like to your point, Square has a lot more first party data that they could then make stronger decisions on. But the eventual place I think where these things end up is open, and really it's around utility, right? Because I might want to get a product from Square, but I might want to get a product from somewhere else for whatever reason, and maybe I'm getting a better deal there. And so our view has always been, the open network. We're the marketplace. Again, we don't have any preferential treatment of one issue over another, and we're all about the transparency. So I think there's a place for kind of closed ecosystems. I think they could do stuff, a bit more deeper integrated. But the eventual consumer of connecting, hundreds of millions of people with tens of thousands of financial products, doing that in a closed way will be very difficult to scale. And at scale, I think the open model will win out at the end of the day. And as long as we're transparent and the customer knows what they're getting, and both sides of the party, both sides of the ecosystem can benefit, I think that's a model that could scale really well.
Ranjit, great talking to you again, and thanks for joining us today.
Awesome. Yeah, great conference, Zach. Thanks for having me here. Enjoying it.